All right, I think we'll get started. It is a full webinar this evening. My apologies to those who were not able to log in. I am recording this as a video, and as long as we have no technical problems, everyone that is registered will receive an email with the link to the video either tonight or tomorrow, probably more likely tomorrow. And you'll be able to go back and view this then. All right, so tonight's session is on active trading with the Stockscores approach. My itinerary you can see on screen. I'm going to do a little introduction of myself. We'll talk about my concept, my approach to active trading. I'm going to explain how we measure performance at Stockscores because it will be important for some of the other topics tonight. When we get into the economics of trading, we're going to talk about that performance measurement. And if you don't understand how that works, then you won't be able to make sense of the economics of trading section. I will show and explain a little bit of my process for finding trades, and we're going to then talk about the components of any trading approach, and finally some of the things you can do to become a trader, at least if you want to follow my method and approach to trading. So, introduction. I've been trading for about 25 years. I started when I was 19 years old with $3,000 in capital, some of which I borrowed from a credit card. Back in those days, the internet was really in its infancy. I used to phone into a broker and make trades. Along the way, real-time price information became available, but it was very expensive, so I used to hang around the Alberta Stock Exchange in Calgary and get my real-time quotes. Rush home with a list of stocks that met my basic criteria, look at charts which had to be downloaded one at a time from the internet, and it would take a long time, and try to get all that done before the close so I could take positions in stocks that met the criteria. And oddly, 25 years ago, well maybe not 25 years ago, but 22 years ago, I was essentially doing the same thing that I do today. Now, today it's a lot more sophisticated, we have better tools, things move faster, but it's the same basic concept, which is what I will talk about today. Now, eventually, I decided to develop my own tools for trading because my approach is somewhat unique, and the things that I needed to do it effectively just didn't exist out there. And so I decided to develop my own tools, one of which is Stockscores, and I also developed indicators for some software that I use, something called TradeStation, which I'll talk about today as well. In 1999, 2000, I developed some educational products for others to learn my approach to the market. I had people always asking me to teach them, so I decided in early 2000 to do that, and I think we taught our first course in 2001, and I still teach a few people every year, perhaps 50 to 100 people each year. Not a lot. I primarily trade, but I also do teach, and one of the reasons I do these webinars is to help people learn a little bit about my approach to the market. So I was trading today. I've been trading just about every day lately, and it's always based on the same concept, which is what I want to get into now. Most stocks, most of the time, are not worth trading because most stocks are efficiently priced. What that means is your success in buying most stocks is going to be random, and this really comes back to basic financial theory, the things that they teach you in business school about the efficient market hypothesis. And unfortunately, most people don't get that. They think that if they just buy a stock on a tip or on a whim, that they might have that big winner that goes up 30% in 4 days. The reality is most stocks don't do that most of the time. However, every single day there are stocks that do that. And early in my stock trading career, I decided that I wanted to figure out what those stocks were and how to find them early. And I've spent the last 25 years trying to come up with the best approach to finding them. Every day there are hot stocks, and I always want to focus on abnormal activity as a way to find them. So my approach really revolves around this focus on abnormal activity, which I'll touch on in just a moment. However, there is more to trading than just buying the right stock. Picking the entry point is only one part of the equation, and if you don't realize that early on, you may be a great stock picker, but you probably won't make money, because in addition to picking the right stock, you must also know how to manage risk effectively, how to preserve your capital, and how to exit at the right time and overcome your emotions. And so we'll touch on some of those things tonight, but I want to begin by just focusing in on this concept of abnormal activity. So I'm going to jump over to my TradeStation platform here. So this is the program that I use to analyze stocks. It's not the program I use to execute trades. I use my broker's platform for that. I use Disnet and their platform, which is called DD+. But for my analysis, when I'm swing trading and day trading, I use this platform, which is called TradeStation. And the chart that you see here on screen right now is the stock that I traded a little over a week ago. And this stock caught my eye because it began to trade abnormally. Now you can see on the screen there's some little pink dots. They're right there on June 10th. You can see 3 of them in a row. I've written some algorithms that look for statistically significant abnormal price and abnormal volume behavior. And we apply those algorithms to all of the stocks that trade in the market, looking for things that don't normally happen. The idea is that if a company has some big fundamental news coming, someone knows about it usually before it comes out, and they will act in the market aggressively, buying the stock in an abnormal way and cause the stock to make an abnormal move. And of course, without knowing anything, I can jump on that stock simply by following those people that have the best information. If you're going to beat the market, if you're going to beat the market, whether you want to be a day trader or whether you want to be a really long-term investor, if you want to consistently outperform the stock market, you have to have better information than the rest of the investment community. It's that simple. And unfortunately, it's very difficult, very expensive to get better information. But every day in every stock, there are some people that just have better information than others. And when they act in the market, they will create the abnormal activity. So in this case, this company, Geron Corp, has a drug, I believe, and on the 12th, when the stock made that big gap up right there, the company announced that they had, I believe it was some testing results that were very favorable. All right, so that's good news. If you're in the drug business, in the business of making pharmaceuticals, and you have a new drug that's being tested and it's successful in trials, then the chance that that drug can be sold and made into a commercial product is that much higher. And so the ability of your company to make money grows significantly. We all understand that, but what's important is to understand that the people that read about that news on the 12th of June are actually a little late in knowing, because there were some people in the previous 2 days that knew something was going on. The reason this stock started to behave abnormally right here is because someone knew that that information was coming, that that news was coming. And maybe it was only a rumor, maybe they didn't know for certain, but those people started to act in the market and create the abnormal activity that I follow. Now, I bought the stock right where my cursor is, not because I know anything about this company, Geron Corp, but simply because I could see from the trading activity that there was a high probability that that stock was going to go up. And that's really the concept of what I do. Now, when I'm active trading, I'll look at this type of chart, which is a 13-minute chart, or I'll sometimes look at a 2-minute chart if I'm day trading. If you're looking at a 13-minute chart, then you have to check the market every 13 minutes for what I teach you to look for. If you're day trading the chart, then you have to watch a list of stocks that are behaving abnormally, again, for what I can teach you to look for. At this point, all I want to drive home is that the concept is very simple. We recognize that we need to have better information than others to beat the market. We recognize that we probably don't get better information than other people, but we know that the people that have the best information will act, and when they act, they create abnormal activity that we can have a computer look for. All right, so hopefully that makes good sense, and let's jump back to the presentation and continue on. So the whole concept then is to find these stocks that are trading abnormally. Now here's what I have found in my research. Most fast-moving stocks, in other words, the ones that really beat the market, most of them start their trends with abnormal activity. However, not all abnormal activity leads to big price moves. So that's the logical thing that you really have to understand. Most stocks that do well will start with abnormal activity, but not all abnormal activity leads to big price moves. And therefore, you must combine this search for abnormal activity with some other analytical methods to trade the stocks with the very best potential. In any one day, I might get 50 to 100 alerts of stocks that are behaving abnormally. But I will only take somewhere between 2 and 5 trades a day based on those signals. So we're actually taking a relatively small percentage of the signals that come along. But consider that there's 15,000 stocks trading in North America. And if you can whittle that down to 50 to 100 stocks a day, and then whittle that down to 2 to 5 trades, you start to see how you can be efficient at doing this. All right. So now before we get into actually looking at charts and what I look for, I just need to teach you a little bit about how we're going to measure performance, because it will be important for some of the rest of the content in this presentation. Performance must be measured in consideration of risk. You know, it's not really a smart thing to say, hey, I made $1,000 on a trade if potentially you could have lost $2,000, because your risk considerably outweighed your reward. But it drives home the point that we want to judge our performance using reward for risk. Now let's jump back to excuse me, the Geron chart here. So I'm going to just draw some lines in this chart that really drive home this point of risk reward. All right, so the green line where my arrow is right now is my entry price, 224. The red line, this one right here, the upper red line, is my what I call my support price. It's sort of the area where I expect to take my loss. It's at $2.14 a share. Okay, so if I'm buying at $2.24, and I'm going to plan to lose at somewhere around 214, maybe give a little bit of extra room, then I've got roughly 10 cents a share in risk. And if I buy 10,000 shares, well, 10,000 shares times 10 cents a share represents $1,000 of risk. Now, each of the lines drawn above that green line represents a multiple of risk, and these are my reward lines. All right, so as you see me moving my cursor up and down, that really represents the multiples of risk that that stock is making me. So at the purple line, I was making a 1-to-1 reward for risk. At this next green line, I was making 2-to-1. At the yellow, 3-to-1, then 4-to-1, then 5-to-1, and after the stock made its big gap higher, I was actually on the open net on that day making 11-to-1 reward for risk. Now, if I risked $1,000 on the trade by buying 10,000 shares, then at this point I am making $11,000 because I'm making 11 times risk. All right, so that's how we're going to measure performance. You'll always hear me talk about I got a RR of 5 or an RR of 3. RR is reward for risk. So a reward for risk of 3 means if I risked $100, I made $300. If I risked $1,000, I made $3,000. All right, so that is the general idea here behind reward for risk and how we measure performance. Now we can get into the economics of trading. We want to measure our success in trading over a large number of trades. It's quite a common thing to say, hey, I made $5,000 in this trade, or I made 21% on this one trade, but you might have just got lucky. You know, in a hot market, anyone can get lucky. In order to measure the success of a strategy, you really have to understand whether a trade or the rules of your strategy will make you money over a large number of trades. You know, and I've tested my strategies. I know that if I do them 100 times, I tend to be right 6 or 7 times out of 10, lose money 3 or 4 times out of 10. Sometimes, in some weeks, I'm more wrong than I'm right. But because I have a high reward when I'm right versus a low risk when I'm wrong, I can still make money. Now, a sample size of 5 or 10 trades is not sufficient to judge the success of a strategy. Statistically, you need at least 30 trades to judge whether a strategy is successful. And more ideally, you should have a test of 100 trades using a set of rules to determine whether a strategy is effective. All right, so let's go into a little bit of the economics of trading. Suppose the following. Suppose I have 60% of my trades are losers, 40% of my trades are winners. My average loser is $500. So when I lose, on average, I lose $500. And when I make, on average, I make $1,500. The question is, how much do I make or lose after I have made 10 trades using the following metrics? I want you to just take a moment to see if you can understand the question and figure out what the total profit or loss would be after 10 trades with those economics. All right, we're going to jump over to the answer now. So the answer is as follows. Well, 6 times you lost $500, so that is a total of $3,000 in losses after 10 trades. 4 times out of those 10 you made $1,500, so that means that 4 times out of 10 you made $1,500 is equal to $6,000 in total profit for a net gain of $3,000. So even though you're only right 40% of the time, because your average reward is greater than your average risk, you actually made a profit. And I've had many trading weeks where I've had a losing percentage, but I've still managed to make a very good profit because I've had some big winners. So the key then is you have to be willing and able to take small losses, and when you have a trade that's working, to let it run for those big gains. And it makes even more sense when you see what I tend to find in my own trading. Out of 10 trades, and this is just a generalization, it will vary by week to week, but over a large number of trades, I generally find that out of 10, I'll have 2 bigger winners with an RR of 5 to maybe even 15. I mean, those 15s, I've even had 20s before. Those are the big winners. They don't come along very often, but generally in a week, we always get some that are above 5. And then out of those 10, I'll have 4 or 5 losers and another 3 or 4 smaller winners where the RR is somewhere between 1 and 4. Now what that means is that the small winners and the losers, they tend to balance each other out. And really my profit comes from the 2 trades out of 10 that have the big profits. And therefore the key, the absolute essential thing to making money as a trader is to let those big wins happen. But guess what most people do? Most people, being normal human beings, they are more inclined to hang on to their losers, so they don't have 4 or 5 small losers. They might have 4 or 5 bigger losers with a negative RR of 2 or 3 or 4. And on the first sign of weakness in a winner, because they get a little bit scared, they'll sell those winners early, and maybe they'll make 4 or 5 RR, but that trade ultimately runs to an RR of 10, and they don't enjoy that big profit because they get shaken out of the stock early. So in the economics of trading, you have to recognize that you're playing a numbers game. You're not trading one stock at a time. You're trading a strategy over a large number of trades. And you'll go through hot streaks where you get 10 winners in a row, and you'll go through cold streaks where you get 10 losers in a row. But over a large number of trades, you should, if you have a good strategy, have those couple big profits, some small profits which outweigh or balance out the small losers, and your total profitability really comes from those occasional big winners. You know, stock trading is, and I don't fish, but it's a lot like fishing, I think. You put some bait on your hook, you throw it in, and sometimes you lose your bait, sometimes you get a little fish that you have to throw back, and every once in a while you catch that big fish. And that's really what we're doing as traders. We're throwing out trades on stocks that meet our criteria. Some of them are losers, some of them are small winners, but every once in a while we get that big winner that pays the bills. All right. So now let's talk a little bit about the process for finding trades. And I have two tools that I use for active trading. Stockscores.com is the website that I own. I'm sure you're all familiar with that one. And in that website, we have a tool called the Market Scan, which allows me to filter through the entire market looking for stocks that meet my basic criteria. Now, I can select a scan, and so one scan that I like to do is something called the simple swing. So for the person that doesn't want to be super active, they don't want to use TradeStation, which is what I'm going to show you in a moment, you would run this simple swing strategy throughout the day looking for stocks that are, guess, behaving abnormally. The stocks that are trading with more volume than normal, making price moves that are abnormal, the simple swing will find those for you. So all I do is I click on simple swing, I run the report, and it's going to give me a list of all of the stocks that meet those basic criteria of the strategy. Now, once you have that list of stocks, you are then going to analyze the charts to see if they have the right kind of chart pattern. Now, what I want to do now is jump over to the tool that I use more often, which is TradeStation. So for the person that wants to make a career out of trading, even if it's a part-time career, they want to trade the market fairly actively, this is the tool that I recommend. It has nothing to do with me. I don't own TradeStation. It's an American software company that I utilize myself. You subscribe to it. What I do for you is give you the indicators that put the little pink dots on the chart there, and I help you set it up so that you can find these stocks moving. The process is pretty simple. We start off by doing a scan. So I'm going to run a scan called Gainers, and I'm going to grab all of the symbols that come up in that scan, and I'm going to paste them into a second what's called a radar screen. All right, and it's quickly calculating some indicators for me. And then I'm going to grab the more active of that group, and I'm going to paste them into another screen, right there, which calculates for something I call an action candle. So you can see on my screen now there's these little pop-ups happening here, and those are telling me that I'm getting an alert. Now obviously the market's closed right now, but during the trading day I'm watching a long list of stocks, about 1,000 stocks at a time, and I'm looking for stocks making action candles. What is an action candle? It's the little pink dot that we get painted on the chart. And all that it represents is abnormal price and abnormal volume action. So here you can see a stock that I bought today, actually, AVEO, and I bought it right there on that little pink dot. Now, why did I buy it? Well, number one, it's behaving abnormally. That price gain at that pink dot is abnormal. It's also trading abnormal volume. The number of shares traded on that 13-minute interval was abnormal. And then when I look at the daily chart, I see the right kind of chart pattern. In this case, the stock was breaking from what's called a flag pattern. And there's a dozen different chart patterns that I look for. I wouldn't have known to look at this stock unless TradeStation had rung a bell for me to say, hey, Tyler, take a look at AVEO. It is behaving abnormally. We can get the computer to do all the work. Back when I started trading, I used to hang out at the Alberta Stock Exchange and look for abnormal trading action in stocks, but it was a slower process. I'd use these old cumbersome, they were called star data terminals. We'd run through lists of stocks that were moving, and then I'd have to race back to my house to look at charts because they didn't have charts on star data terminals at that time anyway. Eventually they did. It was a really cumbersome, long, involved process. Now we can do this in just seconds. And all that I'm trying to do is look for abnormal action from the right kind of chart pattern. Now, there was abnormal action in AVEO back here, but that wasn't the right kind of chart pattern. There was some abnormal action here, but that wasn't really the right kind of chart pattern. And then there was abnormal action here, which did qualify. And what qualifies and what doesn't qualify, those are the things that I teach in my active trading course. I'm just going to jump back to Stockscores here. Here's our list of stocks that were behaving abnormally today. Doesn't look quite right. I'm just going to run this again. Let me just run the simple swing here. Run the report. So 31 stocks today were trading with statistically significant price gain and volume, and that's what that particular indicator looks for. I can then tell the website to display those charts for me. We were having a little bit of a problem with the charts about half an hour ago. I've actually got one of my developers working on it right now. So this is something, if you're a member of Stockscores, that you can try later on. And really what we want to do is look for stocks that are trading abnormally where they were really unnoticed before. You see on the list there Groupon. So Groupon is a stock that just came alive a couple days ago. You can see that really nobody cared about it. Okay, the stock was basically trading sideways, and then all of a sudden we had a pink dot there breaking a downward trend line. Stock was breaking a pullback on the daily chart, and it's gone on a pretty good run. Now, I didn't love the pattern at that moment. I actually passed on this trade, but this is the kind of a thing that we look for. We look for stocks that are boring, nobody cares about, and all of a sudden there's some buying interest. Why is there buying interest? Because someone has some new information that justifies paying a higher price. Look at a few more examples for you. Here's a stock that has been hot the last little while. It started behaving abnormally back here. You can see the big spike in volume, the purple or pink dots right there on the chart. And that stock in just a few days has gone from 210 to 264. It qualifies as a great swing trade. Higher price stock, I generally don't trade the higher priced ones because you don't get as much bang for your buck, but I know many of my students will follow these ones and trade them. Solar City stock right here, pink dot from a pretty good pattern, rising bottoms, something we look for, breakthrough resistance, abnormal price, abnormal volume action, and on a reward for risk basis, and again we'll draw the lines on here, that stock is now up more than 11 to 1, probably 12 to 1 reward for risk. All right, now I wouldn't have held it that long. I actually had a sell signal on this trade right here, and that's again something I teach in my courses, but you get the idea. When there's abnormal action, there's a reason, and when more and more people learn about the reason, more and more people want to buy the stock, and these stocks go on these big jumps. Pull up, here's another one that I've traded recently. Stem cells, right here, abnormal action. And then it set up for a day trade on this particular day, which is how I traded it, sold it the following day. But you'll just see the pink dot from a predictive chart pattern leads to that big upward trend. There was another good pink dot right here. This one a little more noticeable. So that's the idea of what we're looking for, okay? So we'll jump back to the presentation. That's the tools that we use. Let's talk a little bit now about the components of a trading approach. If you want to trade the market, if you want to, whether you want to do it part-time on the side, whether you want to make a career out of trading, you need a few different things. First of all, I'm a strategy trader. I don't trade on tips. I don't watch TV and listen to the people on TV, passing out stock tips. I don't listen to the media in any way, really. I look for proof in the market, and I use a set of trading rules that I've developed. There are 4 or 5 rules. It's actually not very complicated, but they're strategy rules. So I've developed a set of rules for when to buy, when to sell, when to manage, or how to manage risk, how to manage emotion, and that forms the basis of my strategy. Anyone can develop a strategy. There's books on how to develop trading strategies. I've written my own books on how to develop trading strategies, and it's really the part of trading that I enjoy the most, is coming up with an idea, testing it, going out and practicing with it, making sure it works in the real market, and then trading it. Now, many of you may have heard about algorithmic trading. That's really what we're talking about here. You can computerize your rules if you want. So a lot of big investment funds, really the top performing hedge funds in the world, are trading algorithms and using the kind of methodology that I use. I still have a human element in my trading, and I still sit here and actually execute the trades, but there are companies who just develop a set of rules and have the computer execute it. It can cost a lot of money to do that for computer equipment and for the programming and the hardware and all that kind of stuff, and the data feed. So it's not for everybody. I use sort of a hybrid algorithmic approach where there's still an element of human interaction. You also, I think, need some chart reading skill. We're using market action to pick our entry and exit points, and you have to learn how to read charts. Why is the pattern on this chart a good one right here? Well, if you've ever taken one of my courses, there's rising bottoms, sideways trading, low volatility, optimism, break from low volatility, all of the things that I teach people as to why that abnormal activity is what is important. And it worked. It went, that stock went for a big move after that break from a predictive chart pattern. You need to have a process. So I showed you my process in TradeStation for how to pick my stocks to watch, what to look for, and the steps that I went through to identify them. It's not enough to have a set of rules. You got to have an efficient way to exercise those rules. Tools are important. Human beings can't do this anymore. There's too much competition in the market. You need computerized tools to make you effective. So I've got Stockscores.com for the longer term trader, and I've got TradeStation with my indicators, those little pink dots that you saw on the chart, for the more active trader. You can't, no matter how good of a strategy you have, no matter how smart you are, if you don't have emotional control and discipline, you will not make it in the trading game. And so a big part of what I teach is for people to learn methods to control their emotions and stay disciplined. And of course, you need capital. And really what I want to emphasize here is you need a method that preserves your capital. If you put, let's say, $50,000 into the market, you can't afford to take $5,000 losses because you're going to eat up your capital. And if you're out of capital, you're out of the game. So whenever I develop strategies and teach people how to apply my strategies, there's a very specific way we go about exercising the use of our capital so that we can really maximize the return, but without taking so much risk that we can go out of business. Okay? So how to become a trader? Here's the steps you need to take. You can spend years learning how to read your charts, how to manage risk, how to maintain emotional control, developing your own tools, developing your own processes, developing your strategies. It took me 8 years before I was successful because I had to teach myself. There wasn't books out there like there are today. There weren't people teaching courses on how to trade the stock market. The alternative is to take someone's course. So my offering is the Stockscores Active Trader. It's a 12-week program, which you can fast track. I mean, some people will do it in 3 weeks or 2 weeks even. But for most people, I suggest it takes 12 weeks to learn my approach, and then it takes even more time to practice and get really good at it. Just like anything, you don't go to law school and become a successful lawyer the first day on the job. It takes some time to learn your skill. But what the Stockscores Active Trader 12-week program does is it saves you all of the time in trial and error and trying to figure out these other components. Plus, I give you the tools, I give you the processes, I give you the strategies that I've spent 20 years figuring out. There are other people out there teaching. I'm not the only person that teaches. In fact, there's people who that's their primary occupation is teaching courses. There's companies that have trading schools that all they do is teach every weekend. That's not me. I teach a small number of people every year. I mostly trade. I don't think you can teach people how to trade unless you're doing it yourself. I have looked into what some of these companies charge, and they have a tendency to sort of bait you in with a really cheap upfront course, and then all of a sudden you need level 2 and level 3 and level 4 and level 10 before you're actually so-called fully trained, and it can very quickly, your education can exceed $20,000. I've had students who've taken my course tell me that they've spent over $20,000 learning the approach that they've been taught from somebody else, and then it didn't even work all that well. Many companies have an average cost of $8,000 to $10,000 for their trader training programs, and at the end of the day, I've looked at a lot of them. They're not that great, and I think that you really need to evaluate whether the people teaching it are actually training it on their own. So you can also figure it out yourself. I would say that's even more expensive. I lost thousands and thousands of dollars trying to figure out the stock market, and the mistakes you make, the time you take, the opportunities you miss, that can also really add up. So what I do for people is teach a small number every year. We have two courses. One is an investor course, but the focus tonight is on active trading. I will do a webinar next month on investing. The Active Trader 12-week program teaches you my strategies. It gives you my TradeStation code, those little pink dots that we had on the chart. It's all the teaching is done through videos, books. I do live classroom teaching as well, but right now I'm not doing any of that. So I have videos of my live class, which you can watch from your own home. There's about 6 hours of video that you go through and you follow along in the textbook that you get when you take the course. Once you've done all that material, then you do your 12 weekly assignments. Some people fast track that. I send them all the assignments at once and they do it right away. At the end, I work with you to make your trading plan. So if you do this as a home study course, then we get together online and I help you come up with your plan, sort of funnel you into the right strategy based on the type of trader you want to be, the amount of time you have, the amount of risk you want to take. That's all part of the process. And throughout that process, and really for 6 months, you always have email support from me. The cost of this course is $3,495 as a home study. If you attend a live class, it's $39.95. That includes all your course videos, your books, my TradeStation indicators, which, assuming you knew how, the math to go into them, you'd still have to hire a programmer and probably pay them a couple $1,000s to program those indicators. That's what it cost me. 6 months subscription to Stockscores, 6 months subscription to TradeScores. These are ongoing education. Stockscores is another tool, get your charts and that sort of thing. Unlimited email support from me. There is one other option if you want really a lot more hand-holding. You want to meet on a weekly basis online in a one-on-one Skype sort of chatting session. That cost is $74.95 for a 6-month mentorship. So two options there. Most people do the $34.95 home study option, but if you really want me to help you set up your computer and really guide you through the educational process, it's just more of my time, and so it's more expensive. That's why the cost is $7,495. If you would like to take that course, or if you just have questions, I recommend that you email me. We can have a chat over the phone if you want. If you have questions, I don't do pushy sales. I'm there to help you decide whether this is right for you. If you want to sign up for the course tonight, great. Go to stockscores.com/learn, which is the address you see there on screen. You can actually enroll right online on that web page, and we'll have you signed up within the day. Send your books out. You'll get the video links by email. It all happens very quickly. And although it's a 12-week program, there's really no limit to how long you can have to get this done. If you want to take 6 months to go through the material, great. If it takes you 3 weeks, great. I'm there to help you throughout the process. I spend my whole day trading, and most of trading is waiting. And so I have a lot of time in front of my screen to help my students learn. And we do live trading events as well. I'm going to let everyone that's registered for this event know about any future live trading events. So you may get an email from me in July if I plan to do another event. My last event was sold out, so those people all have first right of refusal on the next one. But if we have some openings, then I'll email everyone out for this group if they want to actually watch me trade live. I do that for day in and day out for the month or for a few weeks anyway. All right, so I will take some questions. A few people have asked me questions. I'm not going to answer all of them online. I may do some of that after the fact. Someone is asking if they can take the 12-week program in September. You can do it anytime you want. Summer is a slow period for the market, so it's often a good time to learn. I have a little more time for teaching in the summer, which is why I'm doing this now, but you can do it at any time. William, why don't you email me some of your questions? He did point out a question about just the entry and exit point on a stock, but I'd rather just go to the specifics of that later. Question, will I be coming to Ottawa or Montreal? I don't have any plans to. I'm sort of traveling less and less these days, more focused on my own trading. And the home study course is a decent option. I've got lots of people doing it. In the last week, we've had a number of new students sign on for that. And you get the same support from me. You actually get some extra support from me, and you get all the same videos. The only thing is you have to be a little bit of a self-motivated person to actually take the time to watch those videos. When I teach a live class, you're forced to sit there and learn it for the day. With the home study, you have to do it, but I am pushing you a little bit with the assignments. What other indicators come with the home study course with TradeStation? So I've showed you the pink dots. There's some other indicators. One's called an abnormal action indicator or abnormal activity indicator. It's a little line that we plot. I don't have it plotted on these charts. We have this pink dot is actually broken up into two different indicators. One's called a message candle, and the other is that abnormal action indicator. I have a whole bunch of indicators that I'll send you, but quite truthfully, I try to keep things simple, and this is the only one that I'm using right now is this little pink dot. But if you look over here on the radar screen, you can see that there's something calculated over here, this abnormal action. So that's one thing that you'll get as well. You'll get some indication of how to draw those risk-reward lines on the chart. That's in some of the videos that we do. There's, I think, I don't know, 3 different TradeStation videos on how to use TradeStation for this. So everything that you need to know is taught in this course. I don't leave out anything and say, hey, you got to sign up for level 2 like a lot of training companies do. So someone is asking about the Stock School Pro and the Active Trader Home Study. So the Stock School Pro is an older version that's more focused on the investment side, a little bit longer term, whereas the Active Trader goes into TradeStation. That's really the big difference. So if you have an interest in being an active trader and you want to use TradeStation, then you'd want to go for the Active Trader course. Another question, why the 13-minute chart? I like 13-minute charts because there are 30 13-minute bars in a day. It's a nice round number, and it puts me a little bit ahead of most people because most people are using 15-minute charts when they're swing trading. So I like that interval a little bit better. What is the smallest amount that you can start real-time day trading? And the answer to that question is you have to think, what is your time worth? If you have $10,000 in an account, that's going to give you $30,000 in buying power. And I think, if you're reasonably good at it, you can probably earn $200 or $300 a day on average. Some days will be good, some days won't be that good, but on average, $200 to $300 a day. Is it worth your time to sit there all day for $200 to $300? If yes, then $10,000 is enough. My recommendation is, even if you have $1 million, to start when you're trading, start with a small amount, because you will make mistakes. I mean, I've taught over 1,000 people, and there's always little mistakes that you make in learning. It's like when you're riding a bike, you always fall a few times, and eventually you get better at it and you don't fall anymore. So, why not have some low risk when you're starting out, and so that the mistakes don't cost you a lot. Did I hear you say that you automate your exits? I don't automate them. I've got just a logical format for exiting. Because I'm a Canadian, I can't trade through TradeStation. Canadians can't have an account with them. So for that reason, I'm not able to use my my exit rules in TradeStation as an automated approach. I have to, unfortunately, do it manually. But certainly it would be possible, and if you're an American and you can have an automated TradeStation account, then that's something you can do. I'm just looking through some of the other questions here. Do I cover options in my program? I do have a module on options. I personally don't trade options a lot, but many of my students do, and I cover the basics of options, but I don't get into the more sophisticated option strategies. I just teach the basics. What is your other favorite strategy? Well, when I'm swing trading, I prefer the one that I showed you tonight. When I'm day trading, I do something called intraday pullbacks and the superhero strategy, which are part of the Active Trader course. Someone is asking me, will I come to the States for a program? Some aren't allowed in Canada. I'm not sure I understand. I won't be coming to the US to teach, if that's what you're asking. But of course, you can take my home study course. Pricing for the Active Trader course is already discounted as a home study. It's $34.95 instead of $39.95. For Disnats clients, you can email me and I'll look into that for you. I think that's up to date on all the questions I have told to me. And again, you know, I don't expect you to necessarily decide from this webinar if you want to do my course. I'm happy to talk to you on the phone and answer your questions, or you can email me and I'll answer your questions. I really am not pushy with the sales. You decide if this is right for you. I'll just answer your questions. I think that's about it for getting caught up. And thank you for the compliment, Bill, who thinks my book is the best of the year. That's another good way to get started if you want to learn some of the stuff about the Stockscores approach, is go to stockscores.com/mindless, and you can read my book, The Mindless Investor, which has been very popular. It's actually not available in stores, only from my website. It's also available on Amazon, but you can order it right directly from us. And we have electronic or hardcover versions. What do I use for position trading? I use the Stockscores Market Scan tool. I am going to do a presentation probably next month on position trading. So I'll do another webinar next month, and similar format but focused on a different style of trading. So stay tuned for that. And the link to it will be on the stockscores.com homepage. I think I'll wrap up now. If you have any other questions, please don't hesitate to email me. Put my email address back up there. That's tylerb@stockscores.com. If you would like to register for the Active Trader course or the investor course for that matter, you can go to stockscores.com/learn. There are a couple of videos on that page which may answer some questions. If you have any questions for me, email me. If you want to talk to me on the phone, email me and I'll set up a time to have a phone call. I want to thank everyone for joining tonight, and I hope that it was worth your time and you enjoyed it, and hopefully we'll see you again soon. Thank you very much, everyone.